layo po. Good morning, you're watching Businessworld Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day Friday. The Bangko Sentral resists calls for a bolder attack against inflation. The BSP hikes interest rates by just 25 basis points.
The central bank's continued dovish stance drags the peso to a fresh low in more than 16 years.
Yet another bloodbath in the local bourse. This time, the index plunges below 6,100.
And former Philippine Airlines President Jaime Bautista will be the next Secretary of the Transportation Department. We begin our broadcast with the Bangko Sentral deciding to maintain its dovish stance in tackling inflation.
The BSP brushed off calls for a more aggressive rate hike as it increased interest rates by 25 basis points. The benchmark rate now stands at 2.5%. This was expected by 9 out of 16 analysts polled by Businessworld. At least 6 other economists had expected a rate hike of 50 basis points. Interest rates on the overnight deposit and lending facilities were also hiked by 25 bips to 2% and 3%. These rates serve as benchmark for banks for the loans they offer to the public. Following that BSP decision, the peso plummeted to a fresh low in more than 16 years. The local currency closed at 54.70 against the dollar on Thursday. The Bangko Sentral's latest move is a repeat of the 25 BP hike in May, with Governor Ben Jokno recognizing that upside risks continue to cloud the inflation outlook.
In deciding to raise the policy interest rate anew, the Monetary Board noted that upside risks continue to dominate the inflation outlook up to 2023, with pressures emanating from the potential impact of higher global non-oil prices, the continued shortage in domestic fish supply, as well as pending petitions.
Now, speaking of inflation, the Bangko Sentral raised its average forecast to 5%. That's from 4.6% previously. This exceeds the Bangko Sentral's target band of up to 2 to 4% for 2022.
Now, our guest this morning would have wanted a more hawkish move from the central bank on Thursday, but that obviously was not the case. Let's get his reaction on the 25 BP hike. Dan Rosas, chief economist of Security Bank. Dan, you were gunning for a 50 BP hike here. The central bank fired off with just 25. Your thoughts on the BSP still deciding to take things slow, and what might that mean for a peso that's already at multi-year lows?
What we're seeing here now is that despite rising pressure from an accelerating Fed policy move, the central bank essentially stuck to its plan and raised the policy rate by, shall we say, a modest 25 BIP hike. Now, with that recent move, several things are getting clearer. Now, one is that the BSP likely has not fully shifted their priorities from growth to managing inflation. No? So they're still trying to do that balancing act with growth taking the priority over inflation. And then we have, of course, something that's unraveling. There's a bias for a weak peso. So the peso is not the BSP's main consideration when hiking rates. It's mostly to support the nascent recovery, as well as likely rein in inflation that's within their control.
Okay, just for a better understanding here of our viewers, you did mention it's a careful balancing act between growth and managing inflation. And Medalla even has signaled that, saying, they cannot tighten too aggressively to avoid hurting the economy too much. To give our viewers a better understanding here, what's at stake here? Should the BSP be more aggressive?
I think they have to be aggressive at some point now because, we heard it from the BSP themselves. So they're looking at inflation reaching 5%, averaging around 5.6 in the second half. No? So eventually that's going to cause some pain in terms of the consumption side. So what that means is household consumption could likely slow down and eventually affect overall GDP readings, so because that's 75% of the GDP. However, we do recognize the difficulty the BSP is finding themselves in right now. Inflation is mostly imported now, so that's essentially beyond their control now. So what they can control, the local factors that we have, that's what they are doing right now. Now, this is essentially to sort of rein in price growth, and those emerging at the moment. Now you have a shortage in sugar, we have costlier rice production, we have wage hikes coming in. So those could be within the control of the BSP. And I think what they are seeing right now is that those secondary effects can still be managed by that modest 25 basis point hike. Until it doesn't. No? So if that time comes, that's when we expect them to likely step on the pedal a little bit more.
Okay. Sir, in fact, some economists have taken the words of Governor Diokno, which he mentioned something like, we will do whatever it takes. Diba? Some were even comparing him to Mario Draghi, that this is a little bit more hawkish than the 25 bips that actually occurred. So what is keeping them from being preemptive here? And you mentioned already, they already raised the inflation outlook. How much longer are they going to wait for the inflation to not be temporary before they start being preemptive? And to your view, is this not already warranted right now?
Well, it's a bit warranted at the moment if we compare it to where the U.S. Fed is pacing their rate hikes. But what we are seeing from the BSP right now is actually choosing between their twin mandate. So twin mandates are full employment and price stability. The BSP might have ignored calls for a more aggressive action to sway inflation in favor of growth recovery in the meantime. Incoming Governor Medalla himself has said so. This type of inflation might be impervious to monetary policy action. So as such, it seems that the choice by the monetary authorities at the moment is for full employment recovery. So that means that entails supporting growth. That's what it is doing right now. They're choosing that over price stability, which is beyond its control at the moment.
Okay. Sir, do you agree with some views that we do not necessarily need to keep in step with the Fed? So, especially market makers are saying mawawalan tayo ng foreign investors, especially hot money, if the peso is so weak and if the interest rates in the US are comparable to basically to what we have here. But on the other hand, some are saying that our issues with inflation and our issues with supply chain are very different from what the US is actually experiencing.
Well, it is different, no? And what we're seeing from the policy move versus what the Fed is doing. The Fed is prioritizing inflation over growth. They're trying to slow down the economy. Here, what we're doing is to jumpstart the economy, no? or support that recovery over inflation. No? But there is some debate on what the basis of the curve should be. No? The fact that inflation expectations are higher could be a basis. Meaning if we say that the job of the BSP is to anchor inflation expectations, then given how expectations are now, no, we could say it's behind the curve. No? However, jump-starting policy normalization when they jump-started it last May, no, that's a way to catch up with the so-called curve. So I guess supporting growth recovery remains a top agenda, while inflation is a headwind to that. So without slowing down the recovery too much, I think the BSP is trying to support both, rein in inflation while supporting recovery.
Okay. Now, of course, apart from the monetary actions here, the BSP, of course, urging as well non-monetary interventions. In fact, you already have targeted subsidies being rolled out. Budget for that, of course, being a different matter altogether. But they are also urging a review of non-tariff barriers here to at least ramp up supply. Is it high time for us to take a look at that again?
Yeah, so we have faster inflation, but essentially a non-aggressive response from the BSP. No? So it's either authorities are holding out on a long transitory inflation view, no, para this too shall pass, no, but when? Or an aggressive fiscal response is underway. And I think it could be the latter, no, given that it was outgoing BSP Governor Jokno himself who was espousing that since the start of the pandemic, no, that the monetary response alone might not be sufficient. You need that fiscal response, no, and with him at the helm of the DOF, no, we think a full fiscal response in support of the monetary action is underway. So either way, there's still a bias for a weak peso. So we're supporting the peso is essentially not in its mandate.
Sir, can you clarify that? What levels of the peso are you comfortable with? Because, even pre-pandemic, because of the importation of the Build program, and, we were comfortable with a deficit. Are we still in that situation right now, especially since we need to raise funds to now, do that deficit? And we, of course, want to be competitive compared to other emerging markets.
That's right. Well, the peso is in for more volatility. I think with the Fed still poised to do more aggressive rate hikes, so we're not catching up in terms of the policy rate. So that's essentially going to mean that there's still some scope for further depreciation of the peso. So yeah, it's a difficult situation where we are in right now. With regards to the FX markets, we have a current account deficit poised to get lower. So that's also adding pressure to the peso. So yeah, further depreciation of the peso, that's to be expected. Remittances could likely help with offsetting that a bit. And I say a bit because the levels of growth that we are seeing right now in terms of remittances, that's essentially business as usual. So it could only give probably a slight push towards an appreciation of the peso. But nonetheless, that's a lot of volatility along the way. So the imports will be costlier, so that's going to contribute to some more inflationary tendencies But it's good for remittances. It's good for exports. However, that's still going to catch up with exports eventually because the inputs to exports are also imported. So, that's where the peso is right now. The comfortable level, I think, was 53. And I'm basing that on the DBCC range of 48 to 53. We've long since reached that. And probably the DBCC will adjust targets as well to a higher range, probably. And that will signal a change in the comfort level, if you will, in terms of where the exchange should be.
Now, lastly, Sir Dan, before we let you go, again, the BSP revising its inflation outlook for the country at 5% this year. Is that already a fair projection, or do you see price increases going beyond that?
Well, it is. Our initial call was 4.5% average for the year. We did adjust it to 5.1%. We plugged in the newer upside risks that are emerging. Like I mentioned earlier, you have sugar shortage, costlier rice production, you have wage hikes. So all those, plus the trend of oil, which is quite volatile as well, we're expecting it to probably land at around 5.1% on average for the year. So 5.8 average for the second half is also a possibility.
Okay, so thank you so much for those insights and updates. Robert Tan Roses, Chief Economist at Security Bank.
Meanwhile, President-elect Bongbong Marcos has chosen former Philippine Airlines President Jaime Bautista as the next Transportation Secretary. Marlene Alcaide with the story.
Transport sector in crisis. This is what Jaime Bautista has to face when he takes the helm of the Transportation Department. The former president of flag carrier Philippine Airlines accepted the offer of President-elect Ferdinand Marcos Jr. to fix the Philippines' transportation system.
Today, I met with the president, and yes, I accepted the challenge with the objective of transforming the Philippine transport industry to global standards. Really expecting it, but for the country, I am accepting the challenge.
But apart from this, Bautista admits he has yet to craft a plan, especially since he has been out of the industry for almost 3 years since he left PAL in 2019. Still, he called on the public support.
We will need the support of everybody, support of all the players in the industry, those who are into land, air, and water transport.
Bautista will be getting help from other transport appointees. Light Rail Transit Authority Deputy Administrator Cesar Chavez was designated as Rail's Undersecretary. Chavez was credited for the interconnection of LRT Line 1 in Monumento to MRT 3 in North EDSA. Veteran journalist and lawyer attorney Cheloy Garafil was nominated as LTFRB chairman, while Christopher Chet Pastrana is going to be the general manager of the Philippine Ports Authority. Two outgoing officials from the Duterte administration were also chosen by Marcos Jr. to join his cabinet. These are outgoing Labor Secretary Silvestre Bello III, assigned to chair and be the resident representative designate of the Manila Economic and Cultural Office, or MECO, and Cabinet Secretary Carlo Nograles, who will continue as the Civil Service Commission chair. For News 5, Marlene Alcaide, we are One News.
The national government's budget deficit narrowed in May to 146 billion pesos. That's nearly 27% lower than the 200 billion peso gap recorded in the same period last year. Month on month, the May fiscal balance swung to a deficit from the April's 4.9 billion peso surplus. The Treasury attributes this to the double-digit growth in revenues from the BIR and the customs, as well as spending contracted during the height of the election period.
Now, the Marcos administration's economic team wants to have better coordination with the incoming 19th Congress. Socio-Economic Planning Secretary-Designate Arsenio Balisacan says the economic team and the legislative branch should work closely, especially on the priority bills and the 2023 national budget. Balisacan pointed out that there have been many instances when Congress approved a national budget that was, quote, very different from the original proposal. Balisacan is thus considering having more frequent meetings with legislators through the Legislative Executive Development Advisory Council, or the LEDAC.
Now, the Philippines has abandoned talks with China over joint oil and gas exploration in the West Philippine Sea. This has been confirmed by outgoing Foreign Affairs Secretary Teddy Boy Locsin. Locsin says exploration discussions have been terminated completely upon the instruction of President Duterte. It was in 2018 when Manila and Beijing signed a memorandum of understanding for the oil and gas joint search in the West Philippine Sea.
We had both tried to go as far as we could without renouncing China's aspiration on his part and constitutional limitations on my part. I shut down shop completely. 3 years on, and we have not achieved our objective of developing oil and gas resources so critical for the Philippines, but not at the price of sovereignty, not even a particle of it.
Meanwhile, Locsin calls on the incoming Marcos administration to continue protecting the country's sovereignty.
It remains with the new administration to protect our sovereignty all the way to the wire. Surrender of any portion of Philippine sovereignty is not an option. Not for love, not for money.
Pausing for a quick break, but coming right up after that. We'll check how our local bourse is performing this Friday morning after it closed below 6,100 yesterday.
More of that and other stories when Businessworld Live returns. Stay with us.
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
Okay, Dan, the 25 beep rate hike was predicted, and so was the peso's further slump. How much lower can we go?
Well, Jess, even if it had been predicted and the Bangko Sentral had been saying that 25 bips was going to happen, some were still hoping for a 50 bips, hike there that, of course, did not ensue, and that is causing, again, some anxiety on the peso. You can see us weakening even further, 54.805. So, ang lapit na. Yesterday, we were at 54.70 just after the BSP meeting, and again, as mentioned by our economist economists earlier on, Robert Tan Roses, there's going to be even more depreciation on the peso. And just to show our viewers here this upward trend, in the past 1 month, our peso has depreciated, or at least has increased in terms of absolute value by 4.7% in just 1 month. Still, whenever you ask whether the peso would weaken further, whether it would be hitting 55, Mr. Dakila, of course, of the Bangko Sentral, said the currency remains market-driven. Its movement will depend on internal and external factors, so he did not confirm nor deny that. But as you can see, it's inching towards 55. Now, Jess, let's take a look at our own index here and some sectors to watch, especially as the BSP has moved. Now, the good news here is that our index is up by 1 4/10%, but whether or not this level 6150 is good for our investors here, is up for debate. Nevertheless, two key sectors here to be watching out for: properties and financials. Now, properties enjoying quite some gains here. Of course, this is very rate sensitive. The higher the interest rates, usually the lower the volume of the property sales, and that's enjoying a 1 6/10% bump, together with the holding firms, which is bringing up the bourse by 1 8/10%. Now, I just wanted to take a quick peek at our movers here, Jess. I'll pull out the one-day chart so we can see how we're doing 30 minutes into trade. Converge, the best performing here. But take a look at that. Again, our property sector, Mega World, SM, which of course owns SM Prime as well, and Ayala Land in our leaderboard. And just around 5 stocks here sitting out that rally, with Wilcon in the loser board, down by 3 6/10%, Jess.
Heads up, commuters, the MRT's Libreng Sakay program is ending next week. Management says it's now up to the incoming administration whether or not they will extend the free rides. Gerard de la Peña reports.
Warlino takes the MRT every day from North Avenue Station to Taft Avenue to go to work. He says he is able to save 56 pesos a day because of the free rides, which he uses to spend for food.
Nagamit po sa pang-almusal, pang-umaga, pang-kape, pang-itlog.
Meanwhile, Edilberto, who also takes the train every day from North to Guadalupe, is also able to save up because of the free rides.
Hindi, malaking bagay na yun. Tipid namin yun sa araw-araw. Kasi nabibigyan namin sa mga bilhin.
But many commuters like them are worried as the free rides are slated to end on June 30. The MRT management said they just booked foregone revenues from ticket sales amounting to 6 million pesos a day, or a total of 450 million pesos since the program started on March 28. Ridership has also grown to 380,000 passengers a day, from 280,000 to 300,000 a day before the provision of free rides.
Gustuhin man namin kasing i-extend yan, ang aming termino ay kasabay ng pagtapos ng termino ni Presidente Duterte, which is June 30. Ano mang extension yan, ibinibigay na namin sa bagong administrasyon kung itutuloy nila o hindi.
The MRT management is also hoping that the next administration will continue the maintenance of the train system. For News 5, Gerard de la Peña, We Are One News.
Meanwhile, the World Bank has approved a loan amounting to $178.1 million. That's about more than 9.6 billion pesos to the country to support the Philippines' multi-sectoral nutrition project. Now, the program aims to curb malnutrition, which has worsened due to the rising cost of food. It will provide nutrition support and health services to help reduce growth stunting in infants and young children. The program will target 235 municipalities with high incidences of poverty and malnutrition.
All right, what a way to end the week here, Dan. Again, looking at the peso earlier, as you were reporting, nearing that 55 level.
Exactly, Jess. And one last thing to note before we go, it's the last physical trading day on the PSE today, Jess. So I'll be watching out for that, and we'll be going to the bourse for that closing bell today. So historic day as well.
And of course, we're going to look forward to that story later on, of course. Thank you very much for that, Dan. And that's a first look into the business day this Friday, June 24, 2022. Join us again Monday next week at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Mask on, wash hands, stay safe, Philippines. We are One News.